Manish Vadavan, Managing Director and Head of Interest Rates at HSBC, joins us right now on the show. Manish, good having you. Thanks so much for taking the time out. This is Neeraj here. Afternoon.
Good afternoon.
Before we talk about what's happening to the bond markets and the currencies as well, just one quick word on, if you track it, that is, what did you make of the inflation numbers, which were slightly high, and the resultant impact, if at all, on what the RBI is likely to do? Because a few quarters have to say that with the inflation coming the way it has, it probably gives RBI reason enough to not go ahead with a rate cut, should they be planning to do that.
I think we have an inflation number which threw up as much of surprise as the IIP number did last week. It's pretty on a higher side, the inflation number, and if you go into the details of inflation, it's around 2%, that 1.74% per month. We have seen commodity across the board prices increasing on the primary, on the fuel, and on the manufacturing side. I think with this kind of number in April and the fuel price increases and the power sector increases, what are expected power tariffs, there is still some inflation in the system which has to be passed on. And if we presume, or if we assume that the lowest number of 0.5% per month inflation, this month it's 1.74 month on month, the average inflation for the year would be hovering around 7.5%. So, unless and until actually prices start coming down, the scope for further rate cuts become more and more difficult. At least for the June policy, I don't see any action from RBI. It will depend. By the time we reach July, we'll have two more numbers available with us, and we can take a call. But as of now, it looks like that inflation trajectory seems to be on quite a higher side and far higher than what we expected.
Right. Manish, afternoon. Give us a sense of how you're viewing the liquidity situation at this point in time. Do you see this sort of deficit, continuing to remain high for the next few months as well?
Liquidity deficit, I think, is not going to go down below 80,000 crores, even for the next 6 months, what I can foresee from here. I think the prime reasons have been the currency expansion which just happened at the beginning of April. That was one big factor, which was around 35,000 crores, which added to the woes of banking liquidity. And beyond that, we have seen RBI intervention, though we perceive that some kind of, they're trying to manage that liquidity portion by intervening in forwards now rather than in spot. But the overall things, the way they stand in the month of June, we'll have again advanced tax payments. Liquidity may not be very easy. I think the best phase we can see is around 75,000 crore shortfall. Currently, we are around 1,05,000 crore short in the banking system as of now.
Then, Manish, in light of the liquidity situation, then how do you see the yield curve moving, in the near term as well as over the next, next 8 to 9 months, say, both at the short end as well as at the long end?
See, if one starts assuming that, RBI may not be in a hurry to cut rates now, that could put in a situation wherein the short end may remain anchored here at these levels. And on the long end side, the most pertinent factor what we perceive at the moment is RBI has come with surprisingly OMOs in the first quarter of the year itself. In the last 4 years, we have never seen OMOs in the first quarter. And this year they started in the month of May itself. Today would be one of the days we have to wait and watch for RBI whether the last week's OMO was a one-off affair or they're going to continue. I think that will determine, and taking into consideration if OMOs are being continued by RBI, then the 10-year yields could hold between 8.5 to 8.70 levels for the next 3 to 4 months.
Sure.
But if RBI does not intervene, I think the yields might go up by 10-15 basis points.
Manish, out of time completely, but one quick word on how do you view the rupee vis-a-vis the dollar?
I think RBI has taken a lot of action in the last week, and I personally perceive that rupee should start stabilizing at these levels, because we are seeing some kind of better hints in terms of softer commodity prices. But as far as inflows are concerned, the forex flows, it's going to take some time. But with the recent action taken by RBI, I think one should presume that rupee may not go very high above 54 for the next 1 month.